is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of the DeFi Decoded podcast. I am Alex Tapscott, here with Andrew Young. It's been quite a week since our last conversation, Andrew. You correctly predicted that an ETF approval would be one of the things that sparked a rally. Now, we didn't get an approval this week, but what we did get is a little taste of what might happen when an ETF does get approved. Can you tell us a little bit about just the crazy days in the market we've had to start the week off?
Yeah, that was pretty wild day yesterday morning. So it was actually, we're filming this on Tuesday around 9 a.m. and this happened essentially Monday at 9 a.m. Cointelegraph, which isn't really the highest quality sort of crypto news publication within the space, but relatively large, if not one of the largest after maybe CoinDesk. They tweeted out that the BlackRock iShares Bitcoin ETF had been approved. And this sent the market just completely, like one of the biggest sort of 1 minute candles I've ever seen. The price shot up from 28,000 to 30,000 in the span of maybe a couple of minutes, 2 or 3 minutes. It was completely insane. And then the price touched almost exactly 30,000. And just as it touched 30,000, rumors started to come out. Not even rumors, just people on Twitter coming out and saying, is this even real? Like there's no other sources confirming this tweet. And again, a lot of people sort of questioning that Cointelegraph would be the one that would break this news. Eventually, and then there was actually, I saw Benzinga confirm it. Yeah. And then I saw a couple other people come out, and then eventually someone who worked at BlackRock came out and essentially said, like, no, this is completely false. There's nothing.
Yeah.
Nothing.
A real journalist called BlackRock and was like, can you comment? They're like, not true.
Yeah. So one of the funniest things, this is what you see in really illiquid assets, not, a multi-billion-dollar asset like Bitcoin. Multi-$100 billion asset. But anyways, Bitcoin went from 28,000 to 30,000 and then back down to 28,000, all in the span of about 15 minutes. Completely insane. But what it really showed was, one, it just shows how excited everyone was. A lot of people, and I'm actually one of them. I've been saying for a while that Bitcoin ETF would be a huge unlock, but the Ethereum ETF, the futures ETF, was kind of such a nothing burger that, this sort of idea had been creeping into my head that a Bitcoin ETF wouldn't be as big of a news as we think it is. And this kind of just disproved that, just given how incredibly euphoric the market got as soon as the Bitcoin ETF was thought to be approved. And that's with a lot of people also not buying the rumor from the start. So if there was an official, announcement, then 28,000 to 30,000 in 1 minute might actually be too low of a move compared to what will actually happen.
Yeah.
So I thought it was completely insane. And again, it just shows that there's huge amount of demand, or not even demand. There's this Bitcoin ETF is not priced in, which is pretty funny if you sort of believe in efficient markets, because everyone knows that at this point that a Bitcoin ETF will get approved in the next kind of 3 to 6 months. Most people put the probability at 95 to 100% at this point.
Yeah.
But the fact that the market's just waiting for the news to come out to bid it higher is just, it kind of disproves the whole efficient market theory. I'm kind of curious what you thought, because I know we were sort of talking before. It looks like Larry Fink, obviously the head of BlackRock, did an interview after. Did you get a chance to see it?
I did. And before I get to that, I think that the rumor came out at the perfect time. And, who knows? It is, I should say not the rumor, the reporting from Cointelegraph. And where there's smoke, there's fire, but this might have been just literally made up. I honestly don't know. But we have seen this in very liquid markets. Like if there's a takeover rumor for like a very large company, you can see moves of 10% in moments. Now, very few companies have a market capitalization of $500 million or $500 billion, and those kinds of companies are not typically the subject of takeover bids, like hostile takeover bid or something. But you've seen in the energy patch and in other parts of the economy, $10 billion, $20 billion kind of market cap companies shooting up like that. So it's not totally unheard of for something large, I guess, in size. But to put the context around this, so on Friday, the SEC had a deadline to basically appeal the ruling that we discussed in August around Grayscale's GBTC Bitcoin Trust. And basically, in that court case, the judge basically said that the SEC's case was without merit, effectively, and the SEC, rather than appealing, chose not to appeal it. So if you look at Grayscale's Bitcoin Trust and the Ethereum Trust in the last sort of 6 months, what we've seen is the discount to the net asset value narrowing steadily. And at the beginning of the year, it was 45% in the case of Bitcoin, maybe even higher in the case of Ethereum. And as of this morning, it's 14.5 and 24.5 or 25, something like that. So clearly, the market believes that the odds of an approval of a conversion are increasing. I'm frankly surprised that it's as high as it is. The Bloomberg analysts that cover this say, based on their reading about all of this information, that the odds of a Bitcoin ETF approval by January 10th of next year is something like 90%, right? So, okay, there's a couple things to consider. There's the time value of money. So if it's a full quarter from now, you can earn 1.25%, 1.5%, maybe, more or less risk-free. So that should be factored into the discount. In addition to that, there's the fees that you have to pay to Grayscale, right, in the meantime. And then there's the cost of borrow if you want to be market neutral, shorting Bitcoin and going long this trust into the conversion. So the trade there would basically be net of those costs. You could earn some kind of risk-free return if you're correct that a conversion will occur. But even still, I don't know what the cost of borrow is on Bitcoin, but even still, it strikes me that 15% between now and Jan 10th, even factoring in all those different things, seems like a really wide spread. And it seems like an even wider spread in Ethereum. Now, when it comes to an Ethereum ETF approval, the outcome is uncertain, or the timing is uncertain. But in my view, the outcome is clearer than people think. Because if a Bitcoin ETF gets approved, I don't know what basis you could argue that an Ethereum ETF should not get approved. And we have experience with that in the Canadian market. After the Bitcoin ETF got approved, the Ethereum ETF got approved pretty shortly thereafter. And that's because the markets are, both deep and liquid. They both have regulated futures markets, which allow market participants to hedge risk. And there's demand for them. So I fully expect that there will be lots of, companies and issuers lining up. Indeed, Grayscale itself has announced recently, formally, though it said so in the past, it recently said it plans to convert that Ethereum trust into an ETF. So anyway, this is all to say, the conditions for a conversion feel good. And so a rumor or a bad report or whatever you want to call it, hitting the tape in the middle of that sort of pent-up demand, I think it's not surprising we saw what we saw. But it was just based entirely on, retail buying and short covering, basically. Imagine what happens when the actual people who actually want to own this actual ETF, start buying units and the issuer's got to go into the market to buy the Bitcoin. I think that market is still much larger than I think people believe, basically. And then,
yeah.
And I'm sorry, this is a long answer, but then to your original question was about Larry Fink. So then, the day of this rumor, Larry Fink, the CEO of BlackRock, who, by the way, BlackRock does so many products. They issue so many different funds. And I'm not aware of the CEO going on stage, or being on Fox Business News and like raving about every single thing that they do, right? I mean, they're doing all sorts of different strategies. He might, talk his own book and say, yeah, we think it's a good, asset class or strategy, which is why we're doing it. But he's not like, he basically went on Fox Business and said, the pump and dump, or whatever you want to call it, that we saw in the price of Bitcoin was evidence that there's huge pent-up demand and that Bitcoin is effectively, I'm paraphrasing, but it's like should be part of everyone's portfolio because it's a hedge against risk and it's a new asset and it's like digital gold and blah, blah, blah. So like all the kinds of things you hear, the most passionate people in the space talking about that asset. He's parroting or repurposing all of those talking points, which I just found so fascinating. And even today, and who knows, like this is going to air in 36 hours for the first time. And what we're saying now might have changed by then, but the price today is higher than it was before the rumor hit the tape or before the report hit the tape. So, usually the market gets penalized for, its greed in those moments, but somehow today it's higher. Now, it could be that, yesterday the NASDAQ was a little higher, so Bitcoin should be a little higher. And maybe it's not related to this issue, but I can't help but feel that the market is pricing it in a bit more differently now than they were. And even the day over day, like the spread on the GBTC and the ETH ETF funds have narrowed modestly, but they have narrowed even more, right? So somebody, and it's not just time value, it's like somebody is, bidding those things up because they think this was a data point that is useful, right?
Yeah, I think there's two other things as well to sort of point out. One is once BlackRock, the ETF is actually approved, they have an entire marketing machine attached around the ETF. And so the flows will really start once the ETF is actually live and they're actively marketing it to their user base, to their investor base. That will be, I think, where most of the move should be in terms of the Bitcoin ETF. Like, I guess what I'm trying to say is the Bitcoin ETF should lead to direct flows into the asset. It's not just kind of like a hoped for catalyst. There is direct correlation, I guess, or causation between it and the price of Bitcoin, or at least the demand for Bitcoin going up. I think it's just interesting to see. I mean, I think it sort of shows. The other thing it sort of showed was that I think part of the reason why Bitcoin is actually higher than it was prior to this fake news coming out is that it really showed to people, it kind of opened their eyes to the fact that, hey, maybe I am actually underexposed to this asset. I want to have more exposure to Bitcoin before this sort of pre-programmed catalyst takes into effect. And I just keep coming back to my prior thing, which is there's sort of a three horsemen of Bitcoin catalysts coming up in Q1, which is Bitcoin ETF approval, Bitcoin halving, and what most people think is sort of the end of the rate hiking cycle, if not maybe even rate cuts in sort of at least the first half of next year.
Yeah.
And just all three catalysts are sort of staring us in the face. So yeah, I mean, I still think my sort of base case for crypto is still next 6 months probably will mostly be choppy. Yeah. But I really do think by the end of first half of next year, we should be at the start of like the next kind of crypto bull market.
Yeah, well, we'll see. It's you got to read the tea leaves and the information that we have. We're not, making predictions here, but I can't help but feel like you're correct about that. And we've been talking about this for a while now. Well before all this stuff hit the tape. The comments I wrote about the Ethereum being sort of the ETHE trust being kind of the overlooked one in all of this. I think when I wrote that, it was like a 2% discount. Now it's a 24% discount. So that's kind of interesting in its own right. Okay, just changing the tune because this is we're the DeFi Decoded podcast, but really we're like the Web3 catch-all. And we like to read. You and me, we're interested in the big ideas. I've written a new book, and I read something really recently that I thought was quite thought-provoking, which is that Marc Andreessen of Andreessen Horowitz, and the founder of Netscape, one of the most famous tech investors and people in the world, wrote this thing called the Techno-Optimist Manifesto as this blog post. And basically, if I can like TLDR the blog post, it's that technology used to be the technology could do no right, and now technology can do, or sorry, it used to be the technology could do no wrong. Now technology can do no right, at least in the eyes of the general public. Basically, that people are worried about technology taking our jobs and destroying the environment and sowing division and harming our children and creating social anxiety and so on and so forth. So like all of those concerns. Now he rejects all of them, calls them all lies. Now I'm not sure that that's totally true. I think there is some truth, to the fact that social media harms children, and there's lots of evidence of that. And some of that has to do with the business models of Web2 companies. But in general, the conclusion that he reached is that we have a duty to be optimistic. And he's actually paraphrasing a philosopher named David Deutsch, who wrote this book called The Beginning of Infinity, which is an amazing book that other people should read. I would strongly encourage it. But basically, like, if you look at humanity over 300,000 years, it's only really been in the last like 300 or 400 that we've seen any kind of material improvement since the dawn of the agrarian age, right? So we were hunter-gatherers for like 300,000 years. And then for 10,000 years, we were agrarians. And he basically said, in the post that a farmer living in like Mesopotamia would find that a lot of the tools and the lifestyle and the day-to-day motions of his life would be pretty similar to someone living in England 6,000 years later, right? In Norman England in 1066 or something. And that's true. People were basically peasants, single crop farmers. And then all of a sudden we had the age of industrialization and capitalism and so forth, and that led to huge leaps forward. So why should we be pessimistic about technology when technology is responsible for all of the material gains, improvements in lifestyle, improvements in life expectancy, improvements in health outcomes, et cetera, et cetera, et cetera, et cetera. So it's a compelling piece. I'm not without disagreement on some of the points. He says that part of the reason is we've got these old institutions that are clinging to power, and that they're perpetuating the old model, and they basically need to be brushed aside. I'm not so sure about that. I think lots of institutions like governments will continue to play a really important role in the world, providing a social safety net, providing basic services and so forth. But some people in Silicon Valley feel differently about that. But in general, I really loved it. I thought the thrust of the piece was really great and clear. What was your perspective on it?
Yeah, I think he sort of just verbalized what a lot of us who work in tech sort of feel about, I guess, just sort of our view of the world and how it should be. I think there's a couple things. So one is he's obviously a big believer in the law of accelerating returns, which I also am a big believer in. And I think anyone who sort of pays attention is probably a big believer in, which is essentially the pace of technology development is itself accelerating. So the amount of progress we've made in the last 20 years is much greater than the amount of progress we made from, say, 1500 to 1520. And that's entirely due to technology development, given that population growth is actually decreasing worldwide. It looks like the world population is going to peak at about 10 billion and then start to go down over time if there's not a significant increase in life extension. And so if our population's not increasing, and then as he sort of says, he has this great line, which is economic growth isn't the cure to everything, but degrowth is the kill all. So if our society isn't growing, it causes massive issues economically and socially. And that essentially underlines his sort of core thesis, which is our society is not really built for stagnation. If you look at just the amount of debt we have, I mean, there's just so many different things, so many different sort of systems in place that break down if there's not some sort of level of economic growth, let alone just constant negative growth. And essentially, as he says, in the absence of technology development, we're an increased resource exploitation, which both of those are sort of can't really be counted on, then the only thing that can really step in is technology development, which he sees as being massively hindered by existing institutions.
Yeah.
Elon, if you read Elon's biography, he has a great line, which is, we're sort of in a society where there's increasingly more referees than there are doers. And I think a lot of people who are sort of in Silicon Valley have the same sort of opinion on this. And so he's essentially just, putting words to paper on this kind of ethos, and trying to fight back a little bit on just kind of like the continuing institutional creep of whatever you want to call it, traditional institutions into technology development. I think this is actually mostly targeted at AI, not crypto. So there's obviously been a huge uproar recently about, hey, unchecked AI development could mean the end of the world.
Right.
And essentially what's happening is there's now open debates about whether governments should regulate AI software development, which is kind of crazy, I think, in some ways. I understand, I guess, and there's obviously really smart people on both sides. Like Geoffrey Hinton is kind of like the obvious counterexample to this. He's the father of machine learning and AI, and he essentially, or I should say deep learning. And he's kind of said that, hey, unchecked AI development could easily lead to the end of the world. Marc is kind of on the other side of it, saying degrowth would be the end of the world, and we need AI and technology development to continue growing, given the fact that, like I said, population is no longer increasing and resource exploitation is kind of going down. So, to be honest with you, I kind of lean on the side of Marc, though I do understand the sort of risks. I think something seems wrong about having government regulate software development. Software itself, especially open source, should be protected under free speech anyways, because when you write code, that's just words on a piece of paper. Or the fact that you can quite literally print out code should mean that it's speech and therefore protected speech. So yeah, I mean, I would say I come more strongly in favor of this sort of manifesto. I think, I think the intended audience for this is mostly sort of the AI doomers than it is kind of the crypto doomers. Though they're obviously sort of a big proponent of crypto as well. So
sorry. I mean, that's a great analysis. And I think that the question around speech and software is an interesting one, but it's also a very thorny one because, governments played a role in regulating lots of industries, maybe not regulating the writing of code specifically, but, in creating the conditions for industries to grow, like the internet. So it's like, can it be true that degrowth is bad, but that unchecked AI development could also lead to negative outcomes? I think that is possible. Like, I think it's possible to say, we have a duty to be optimistic, and obviously we should continue to grow and invest in technology, but there needs to be some say by other stakeholders, including legacy institutions in their development. I don't know. I think you can create a synthesis. It's like the dialectic, the thesis, and the antithesis, and the synthesis. Like, what is the synthesis here? I don't know.
Yeah, I think I've had this thesis for a while that we're sort of moving into what's called a superstar economy. So what I mean by that is, as the internet creates global distribution, winners are now way, way bigger than the winners of 100 years ago. Because if you were the dominant newspaper of your local town, you only had sort of your town to win. But now you have internet level scale, and so essentially what's happened, I think, is we created. The world is increasingly becoming a winner take all market across the board for every industry, and so what that means is, I think increasingly there's going to be economic growth will be higher, but it will be more concentrated into fewer and fewer hands. Like, the good example of this disregard my newspaper example, but the better example of this is something like Instagram, which had 12 employees when it got sold for a multi-billion-dollar exit, whereas GM in the 70s and 80s was a billion-dollar company with 100,000 employees. The amount of sort of value you can now create, particularly with internet-level distribution and software, given the incredibly low capital costs to building software, is just so levered that like I said, it's leading to sort of a winner-take-all superstar economy, where sort of a few people create all the value, and then sort of everyone else is kind of the amount of value that everyone else is creating is relatively low in comparison. So I think the implication of that is, I think, is that there actually will be more sort of referees, because we can afford to have more checks and balances on the people who are actually creating most of the value. So I actually think, whereas Marc sort of sees this as a bad thing, and I think in some respects it obviously slows down progress. I think it's also just a natural sort of a natural thing that is natural outgrowth of this sort of economy that we're moving towards, which is, we can afford to have more and more referees to make sure that things are operating smoothly and to the betterment for everyone, because we have more and more labor that's sort of freed up. So I guess in some ways I sort of agree with his manifesto, but I think rather than it being sort of normative, I think it's more predictive of kind of what's happening.
Yeah, I love that. And I also think that basically that needed to be said, because I think the predominant view in the general population, and I don't have polling data to support this, but I would say that it's pretty skeptical of AI and of other emerging technologies. And that is a big change. I mean, there was a time when humanity celebrated each new invention. There were moral panics throughout the ages about everything from the mechanical loom to the invention of electricity and the automobile. But in general, people were really open-minded to the stuff. And these days, it seems like they're not. So it needed to be said. It's important to help sort of reset the conversation. And now we can debate it and see like what the appropriate outcome or path forward is, right? But I think that it's always good to have voices like that, strongly held, well articulated, making the case for these kinds of things. And now we can talk about it. All right, that's it for today's pod. Great discussion, Andrew. I really enjoyed that last segment. We will see everybody next week. We've got guests lined up for the next couple of weeks. So it won't just be me and Andrew pontificating. It will be informed people who actually know their stuff. So we're really looking forward to that. We will see you next time. Until then, that's it for this week. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.